In this video, I'm going to be revealing my full Forex watch list and how you guys can capitalize on the Forex markets this week.
What's going on, everybody? Welcome back to the weekly forecast video. So this week, as always, I'm going to go through Euro Pound, USD JPY, GBP USD, and also gold. Gold this week is on the B list because if we just real quick look at gold, last week we had that very extended move up and gold has just kind of been flying and not really given any pullbacks to get in on the trades. We've just been moving with these sort of parabolic movements, escalated obviously due to the war news. Gold is a safe haven asset. So in times of wars like these, you saw it also with the Russian-Ukraine war, gold tends to just move in a way that's very unpredictable and unreactable as well. So you can't really get in on any of these trades, especially for the strategy that I like to use. So gold is on the B list for this week. Regardless, we will go through it. I'm just not going to be paying that much attention to it. So starting with Euro Pound. Euro Pound looks quite good this week, in my opinion. So how I'm going to be reading this is I'm seeing this as a sweep of the low, followed by a daily breaker structure. Initially, I was seeing this as a sweep for price to head all the way back down to the low. But last week, we did have a very nice reaction from this daily area of demand, which price came into and also wicked out as well. And then we had that move to the upside. And another reason why I wanted to switch my sort of bias was because when price was moving down to this level, we were sort of moving really correctively like this, building up a lot of liquidity. So I think it is likely now that price will head higher and take out some of these previous highs and also head to this previous high as well. If we look on the daily as well, this in my opinion just looks like a pullback due to how corrective it looks. It doesn't look like a full reversal, and yeah, I think it is more likely that price will see some further upside before we get any significant moves down. I don't think the move back down to the low will happen here, but we will have to wait and see. Obviously anything could happen, but at the moment price has come into this very nice level of 4-hour demand, which we induced with these two sort of equal lows. If we go to the 1 hour as well, this was the area of demand which I said price was likely to buy from last week, and that happened pretty much exactly how I said. We had a wick out of the area, so obviously all of the people such as the SMC traders that would have just been setting a limit at this level would have been taken out of the position, and then price made its real move to the upside, and we eventually broke out of this downtrend structure where we went from a printing lower lows and lower highs to printing a higher high, a higher low, and then a second higher high and higher low there as well. So how I'm reading this at the moment in order to get in on some potential buy trades is I'm seeing this higher low as sort of an inducement above this area of 1 hour demand, which was left in balance, induced by this liquidity here where we had multiple wicks in this area. That looks like an area, in my opinion, where lots of people were previously buying, and therefore an area that price is likely going to come and take out before we see any further upside. This 1 hour level of demand as well swept liquidity to the left. As you can see, we had a sweep of this low, which was the Asia low of Thursday, I believe. Had that impulsive move down, followed then by an impulsive move up. We have this imbalance. And as I said, price has switched structure from that bearish trend to bullish. And if we also go to let's do the 15-minute, price has not swept liquidity and broken any structure. So in my opinion, this retracement back down is not a full reversal. In addition to that, price has no real reason to reverse completely from this level. We've taken sort of this minor liquidity here, so you would expect price to do a retracement at the moment. Since we have taken out previous sellers, price will now come for previous buyers. However, we haven't really reacted from any significant areas to cause that full reversal back down to the low to continue the sells back down, in my opinion. So what I see as the most probable thing for the beginning of this week is for price to make a retracement to then continue buying up to some of these previous highs. And that is exactly what I'll be looking for. I'll be looking for price to come into this 1 hour level of demand, take out these previous buyers, and then I'll be looking for that entry back up to the previous high. So yeah, that's all I'm seeing on Euro Pound. USD JPY is looking quite nice for this week as well. Last week, I was saying in the forecast video that the price was a bit ambiguous and sort of directionless ahead of the CPI news. If we go back to here, price was just sort of in this consolidation phase. It was quite difficult to read because we had a break of structure to the downside here with this huge wick, but we also had a break of structure back to the upside. Then price came and broke structure back lower, but it also wicked out the structure, so it could have been a wick out for buys. So it was quite difficult to read, and yeah, I just kind of stayed out of USD JPY since it was difficult to read and there wasn't really any high probable setups in my opinion. But now we've had that clear break of structure to the upside, giving us a sort of directional bias for this pair. So starting from the beginning, we've had, if we ignore this wick, which is what I'm doing because this was caused by sort of a black swan news event, which was a potential Bank of Japan intervention, and I think it was more due to the speculation of it rather than them actually announcing an intervention itself. But yeah, ignoring this news wick, price came into this 1 hour level of demand, taken out early buyers above the level. We've now had a shift in structure from this sort of internal bearish trend to a clear bullish trend, and price at the moment looks very corrective. We've left liquidity above at this previous high. You can see we have like 5 or 6 wicks of equal height in this area, and yeah, price is moving very correctively to the downside, building up this liquidity. So what we can expect going into this week is at some point we should get a pop back up to at least this high at 149.8 to take out previous sellers. And in my opinion, also price will head back to this sort of 150.2 sort of area and also potentially higher. But if we just look at the intraday levels that we have, after price broke this structure, I'm basically looking at 2 main areas of interest to potentially get in and capitalize on the buys. So one of the levels is this wick here, and you may also question this as it is quite different from how I normally trade. I normally trade based off of the supply and demand areas. But what you notice with UJ, and it does this a lot, is it won't come all the way into the demand area. It will come and take out all of the previous internal liquidity. And once it has done that, it will then make its move up. So by internal liquidity, in this case, I mean this internal uptrend that we've now formed where we have, let's go with this, higher high, higher low, higher high, higher low, higher high. The last point of internal liquidity within this current range between the low and the high is this previous wick. So I'll be looking for price and seeing how it reacts once this wick is taken out. The other scenario that I'm seeing is for price to head back down into the 4 hour demand, which is clearly this area here, which was the one which caused the break of the structure and we left behind this imbalance. But yeah, overall price is looking very corrective at the moment. So I'm not expecting a reversal. I will expect further buys until price shows us otherwise. You know, if this demand does fail, then we could also see the sells back down to the low. But in my opinion, the most probable thing at the moment is to see price continue to buy back up to these previous liquidity levels. First one here, like I mentioned, and the second one at the top of this wick. So yeah, at the moment, just waiting to see what happens. I'll have an alert set at this 149.39 level to see how price reacts once it dips below. So if we see something like this where price dips below that level, taking out previous buyers, I would then be looking for that lower time frame entry confirmation to see if price can flip from this mini bearish trend into a bullish trend, looking for a pullback into a key area, and then looking to buy up to that previous high. Or the other scenario is if price continues lower back into this previous level of 4-hour demand, then I will look for the same lower time frame entry confirmation as well. Just to show you what I mean by UJ doing this sort of entry confirmation a lot, where it will come and take out the internal liquidity. If we just look at the daily, there was a very nice example back in the summer where we had this huge push down. UJ came, if we mark this on with the line, to this level, taken out all of the previous buyers within the range. And then after we do that, we impulse back up and come for that high. And the way you can tell that UJ is likely to do this is because at this moment in time, we hadn't come to an area where price would likely reverse from, as we missed this supply and just simply tapped into the imbalance. If price taps into this empty imbalance, you don't expect it to completely reverse, as that's not how price moves. So it came back. This move down here also looked very sort of intentional, as there was no real pullbacks within this level. So it was simply like an impulsive move in search of liquidity. Once it takes enough liquidity, it then continued its move over to the upside, taking out previous highs. And that is a similar situation to what we have here. So yeah, those are the two main scenarios that I'm looking at for USD JPY. Going over to GBP USD. So you saw last week I had this level marked out for the sells. And I said that this would also depend on CPI. So CPI for the US dollar last week came in as an inflation reading that was higher than expected, leading to speculation that the Federal Reserve is likely to continue hiking rates going forward, which obviously caused that bullish push on the US dollar. And since we are trading pound against the US dollar, that would coincide with obviously pound US dollar sells and also triple X USD pair sells. So basically all pairs with the quote currency USD are likely to sell due to that reading from the CPI. But yeah, looking at the technicals, how I'm reading this currently is we had a sweep of this sort of main liquidity pool. And then during CPI, we had this very bearish move to the downside. And after I saw this, I basically said that all of the buys were invalidated. I was previously looking at buys at this level, but once I saw this huge move down, I knew that price was likely to continue selling. So how I'm reading this now is that we've had a shift from this bullish structure where we printed higher low, higher high, higher low, into this bearish structure where we started to form these lower lows and lower highs after this very impulsive move to the downside. We have this sort of these three equal lows below where price currently is, and price is simply just in this area here where you definitely wouldn't expect it to reverse. It has no reason to. It needs to come and take more liquidity before we see any moves to the upside, if any. So simply looking to follow the structure at the moment. We've had a mitigation of this area, which I said price was likely going to come and react from on Friday, which happened perfectly. We then had a further break of structure to the downside. So our current trading range would be between this high and this low. And ideally, I would want to see price pull back, fill in this imbalance, come to this previous level of supply, which wicked out sellers to the left, and see a reaction in this level for then continuation sells. First target at these three equal lows, and then the second target back down at this previous low as well. If we go on the 4-hour, you can see that there's no real area of demand within this region. So in my opinion, this wick is simply liquidity that price is going to come and seek. And we can see GU head lower and continue this very bearish trend that we've been in recently ever since tapping that weekly supply. So yeah, main targets for this week, looking for those sells from that 15-minute level of supply, Main targets are, first of all, this liquidity level at 1.2105, which is the 3 equal lows where we previously had people buying. And then the second target will be 1.2037, which is the current trend low, to continue this trend back down to some lower weekly levels. I don't see price going there this week, but if price takes out this weekly wick as well, we could see some short-term buys as well, which would be quite nice, as this is obviously a massive higher time frame liquidity pool where people were previously buying. But yeah, just looking at the moment to follow the intraday timeframes, looking for a retracement, simple price action trading, wait for the retracement, wait for confirmation, sell back down to the previous low and the liquidity below as well. Yeah, that's pretty much everything I'm seeing on GU. So over to gold, like I mentioned, I'm not seeing too much at the moment due to these very sort of abrupt movements that come out of nowhere due to the war news. So from a daily perspective, how I've read this is prices sort of form this daily breaker structure, built up liquidity in this region. These weren't really, in my opinion, these aren't daily structure points. They're simply builds up of liquidity. So I would not consider this a higher low and a higher high. I would just consider it liquidity. This is, in my opinion, the main higher high, and this is the higher low. Price came back, filled in all of this imbalance, which we previously had from March of this year, tapped into this daily area of demand. And ever since then, we had a wick out of the previous buyers. We broke structure to the upside, and then all of last week we were just trending up. So you could really consider this is sort of the most recent break of structure. This is the higher low, this is the higher high. So really the whole trading range that we are currently in is between this low and this high. But what I also noticed was that price has formed this sort of pause where we have one sell candle followed by this impulsive and imbalanced move to the upside. So one thing I will be interested in on gold this week will be if we get a retracement into this level of demand around 1912, wait for that entry confirmation and buy up to some previous levels. I have also marked out this level where we could see some sort of reaction, just because this is a previous level of unmitigated supply, which swept liquidity to the left as well. So this level, in my opinion, would be low probability. So I'm not really focusing on the sells given how bullish price is at the moment. But what we could see is some sort of like mini reaction from this level. As I said, the main idea for this week would be to wait for that retracement into this level of demand to see if we can get some confirmations for buys. If price does break this level, you know, there's nothing to stop it to going back to this level at 1868. But given how bullish price is at the moment, I think that is quite an unlikely possibility, which is why I also see price reacting from this level. Either from the actual area of demand itself like this, or the second scenario we could see is also, gold likes to do this a lot as well, as with UJ, is a wick out of this area of demand slightly below the wick, and then we continue to the upside. So those are the two possibilities that I'm looking out for going into this week. And obviously if price just decides to continue to fly up without any pullbacks, then that's completely fine as well. We'll just simply wait for price to settle down a little bit and form some more structure. One last thing before I end this is I wanted to go through DXY. So DXY, clearly very bullish, had a sweep of equal lows, daily break of structure. This was the most recent daily lower high, lower low. Then we clearly made this impulsive move past it. Last week, when CPI came out, price swept this previous higher low just there. And if you saw my Instagram reel today, this is basically what I was talking about, where you have a trend in market, price will come and sweep the most recent higher low where lots of people are looking to get in some buy positions, particularly ones where you have an area of demand like this. Price will go below it, and then it will continue its move to the upside, taking out previous buyers. So clearly in this situation, DXY is bullish. We had, if we're looking to follow this trend, we had lower low, lower high, lower low, price impulse past. This would be our change of character. And then we've also had a follow through break of structure just here as well. So simply looking for DXY to continue up back to previous highs this week, which obviously corresponds to those GBP USD sells. Gold at the moment, since it is a risk haven asset, it has kind of lost its negative correlation with the DXY. So we're not really looking to correlate DXY with gold at the moment anyway. Same with USD JPY though, dollar bullish, obviously USD JPY bullish. Also the JPY basket, which shows you the strength of the yen, is still in this bearish trend. So yeah, that should give USD JPY some strength. And yeah, that's pretty much everything I wanted to mention for this week. I hope you guys all have a great week trading, and as always, I will update you guys with the analysis pre-London session at the start of every morning. So have a good week, and I will catch you guys in the next breakdown.